All right, let's talk about something every investor goes through, that emotional roller coaster from total anxiety to hopefully real confidence. Today, we're going to flip the script, turning the fear of missing out into the joy of missing out. It's a simple change in how you think, but it can make all the difference for your financial health. You've been there, right? You're scrolling online, maybe watching the news, and some stock or crypto coin is just shooting to the moon. And as you're watching, this little voice in your head starts screaming, "You're missing it! Everybody's getting rich but you!" It's such a powerful, gut-wrenching feeling, isn't it? Well, if you've ever felt that panic, trust me, you are not alone. It has a name, FOMO. And it is one of the most powerful, and honestly, one of the most dangerous emotions you can feel in finance. It's just human nature to want to be on the winning team. But when it comes to investing, that feeling can lead you straight into a trap. So yeah, let's talk about that trap. Because FOMO isn't just a nagging feeling, it's a real vulnerability, and you better believe market manipulators are absolute experts at exploiting it. The first step to protecting yourself is understanding exactly how they do it. And here is the classic predator that feeds on FOMO, the pump and dump scheme. It's a pretty straightforward scam. A group gets together to create a ton of hype around an asset that's often completely worthless. They pump up the price with all this misleading info. They wait for investors driven by FOMO, people like us, to pile in, and then they dump all their shares. The price crashes, and everyone else is left holding the bag. So how can you spot one of these things before it's too late? Let's start with the big picture, okay? The monthly chart. A huge red flag is when you see a stock that's been doing nothing for months, or even years, and then suddenly, boom, it erupts. And there's no real company news to explain it. That right there is the artificial pump in action. Now, if you zoom into a weekly chart, you can start to see how they build this manipulation up. You'll often find that the same junky stocks are used for these schemes over and over again. So if you see a history of these dramatic spikes and crashes, that's a dead giveaway. You're looking at a recurring trap for new, unsuspecting investors. And finally, on the daily chart, this is where things get really frantic. You'll see these massive price gaps overnight or a huge spike in the morning that just completely collapses by the afternoon. That's the dump happening in real time. That's the manipulators cashing out, and they're using your FOMO as their personal exit door. Okay, so spotting the technical signs is one thing, but to really make yourself immune to this stuff, we have to understand what's powering it all, our own psychology. I mean, why are we so vulnerable to this kind of hype in the first place? Well, it's not just one thing going on in our brains. It's a team effort. You've got FOMO on one side, that's the anxiety of missing out on a big win. But it has this powerful cousin called regret aversion. And that's the fear that you'll regret not doing something if the price keeps going up. This 1-2 punch just pushes us to make really irrational decisions, like buying something we know deep down is already way overvalued. And you really can't underestimate how powerful this is. This isn't some new internet thing. I mean, from the Dutch tulip craze way back in the 1600s to the dot-com bubble, FOMO has been the fuel for basically every single major market bubble in history. It's a timeless and incredibly potent force. Acting on that panic, on that FOMO, well, it has a very, very real cost. This isn't just about feeling crummy for a day. We're talking about tangible damage to your financial future when you let your emotions grab the steering wheel. This is the crazy logic that FOMO creates. It's called the greater fool theory. The idea is you might know an asset is overpriced, but you buy it anyway because you think you can sell it to someone even more caught up in the hype, a greater fool. The only problem is the music eventually stops, and the last one holding the asset when there are no fools left, well, you end up being the biggest fool of all. And here's what happens when we try to outsmart the market. Giving in to that panic selling, then jumping back in out of FOMO, it is a losing game. Just look at this chart. It shows the S&P 500's returns over 10 years. If you had just stayed fully invested, you would have made about a 13% return each year. But if you panicked and missed just the 10 best recovery days, your return gets cut in half. And if you miss the 30 best days, poof, your gains are pretty much gone. It's incredible. So this is the big question, right? How do we fight back? How do we stop being a victim of our own emotions and start being an investor who's actually in control? The answer, my friends, is discipline. I know, it's not sexy, but man, is it effective. Here's the playbook. This right here is your shield against FOMO. It all starts with having a plan before the hype even begins. It means you're doing your own homework on a company's real value, not just how many times it's mentioned on social media. It means diversifying so that one bad bet can't wreck your whole portfolio. And it means investing regularly, what they call dollar cost averaging, so you smooth out the bumps. But most of all, it's about accepting that missing a crazy pump is so much better than getting caught in the inevitable dump.
You've probably heard this phrase, and it really says it all. The goal is not to be some kind of market genius who can predict every peak and valley. Nobody can do that. Real success comes from simply having time in the market, letting patience and compounding do all the heavy lifting for you.
And when you really commit to that kind of discipline, something pretty amazing starts to happen. That constant anxiety from FOMO, it just starts to fade away. And what replaces it is a much calmer, way more powerful feeling. This is the final stop on our journey. Welcome to JOMO, the joy of missing out. This is that wonderful feeling of peace you get when some hyped up stock is going absolutely bananas, and you just feel relief that you're not a part of the chaos. It's the confidence that comes from trusting your own plan, not the madness of the crowd. I love this image because it just captures that mindset shift perfectly. Investing isn't about frantically trying to surf every single volatile wave that comes along. It's about building a solid, sturdy bridge to your financial future and then just walking across it, steadily and with confidence. The goal isn't to catch every wave, it's to stay the course. And really, that's the trade-off, isn't it? Chasing hype is exciting. It's a rush. Disciplined, plan-based investing can feel, well, kind of boring sometimes. But that boring approach is what actually builds real, lasting wealth over time, while all that excitement from FOMO usually just ends in regret. So I'm going to leave you with this one question. The next time you feel that pull, that FOMO tugging at you, just ask yourself this. Am I chasing the hype and the excitement of the crowd, or am I calmly and deliberately building the future that I want for myself? Because at the end of the day, that choice is entirely up to you.